Now, the first thing I would do is to go to a higher time frame, nothing less than the daily time frame. The daily time frame, the weekly time frame, and the monthly time frame. Anything lesser than that is a lower time frame. Anything lesser than that is a childish time frame. I do not go to those levels to draw key levels because those levels don't matter. You understand? Now, these are major key levels. Now, once the major key levels are noted out, I would wait for price to hit them. It will take days to get to this level. So I'll wait for price to get to this level right here. To get to this level, before I look for, the first thing I'll look for here is buy before the sell. So that is the same thing. Now price got to this level and closed. Why didn't it close above that level? But it closed right exactly on this level. That means that is something that it wants to do. So I'm going to check on the um, 1 hour time frame to see why it actually closed at that level. Now, if you see how it was working, you can see that there's a trend line right here that the market is respecting. You see this trend line? It kept making that movement. If you use your divergence, you can see that it was actually declining. But I don't actually like using divergence because the reason is when I look at this market like I already know that it will show divergence. That's the way RSI works. But I'm talking basically pure price action right now. So I don't like drawing my trend line on the 1 hour time frame. I prefer to draw that on the 15 minutes time frame. So let's go to the 15 minutes time frame. Now, if you check on the 15 minutes time frame, you will see that there's a trend line that this market has been following. You can see that it's following a particular trend line. And for those that trade patterns, they will see that this is a rising wedge. This is a very beautiful, everything is indicating that this market is losing momentum, even the candlesticks and everything. This is what closed the previous day. It closed bullish on the previous day. Now the next candle started and it went on with the same bullish pattern, but then again now gave us rising wedge on a key level, rising wedge on a key level. Then what happened next? At the break of the neckline, which is here, the market sold right straight up down into this region. That's giving us 1 to 4. Now, this is a no-brainer. If you look at this on the 1 hour time frame, on the daily time frame, where do you sell here? There's no place to sell here. There's no exact place to sell. So you wait for price to get to that level. Then you will now go to a lower time frame like the 1 hour. Then you can see, if you look at that on the daily time frame, you won't see the swings. But on the 1 hour time frame, you'll be able to see that this market was doing all of this. It was actually giving us some structure, so swing highs and swing lows. You understand? Very simple, straight to the point, swing lows. But this rising wedge, you can't see this rising wedge on that daily time frame candle. On the daily time frame, you can't see it. You understand? You won't see it there. You have to go to a lower time frame to be able to see. That is called multi timeframe analysis. So I started from the monthly to the monthly, the weekly, and the daily time frame. Spotted out this opportunity and came to the 1 hour time frame to verify it, catch the swings, and sold. You understand? Now, one thing I want you to know right here is this: reversals happen on key levels. Reversals happen on key levels, major key levels. Every other thing happening is a continuation. From this point is after this reversal, it is continuation. Everything is continuation until it gets to this key level. This is where a reversal might happen. You understand? At times the market will break this level and we test it. So if it breaks this level, if I don't see buy, I will see sell here. Then once it comes into this point again, that is where you would not expect to buy after the retest to this level. Then you expect this sell here. It's a very simple thing. You don't need too much. You don't need a lot of things to know this. You understand? Now, I also already know that, okay, a reversal has actually happened. Everything I'm expecting is what? Bearish. If I'm expecting bearish, I should be looking for what? Continuation setups, right? I should be looking for continuation. Now, the previous day was this level here. I just look for these key levels on the 1 hour. As you can see, the structures that it printed, you can see, even a blind person can see that this market is all the way um all about sales. This is a selling formation. You understand? It's selling formation claim. Now, what happened right here? As you can see, it sold and then came back to test this low right here, the lower low. And this lower low was a support. As you can see, it was a support right here. It was a support at this point. Now it turned to a resistance right here. There was a support here. It was a support here, but turned to resistance at this point. Now the market started consolidating all around here. It started consolidating, no clear direction, no clear direction, no clear direction. Now, what do you do? Now, what do? You don't just come here, place sell because you know that the market is going down. You understand? You don't just come here and place sell. What you want to do is you want it to rest at a key level. It should come to a key level, which is exactly what happened here. The price consolidated and later went to this key level right here. As you can see, that is where a beautiful sell setup came. This is where a beautiful sell setup came. A beautiful sell setup came right here. As you can clearly see, this setup was so superb. Just enter here and all the way down, giving you 1:4. You can hold it and even get 1:5 out of this trade, but 1:4 is what actually happened here. Now the same pattern that happened here, will also still happen here. That is the same pattern I'll be expecting to happen here. As you can see, this here is a support level that the market just tapped. The market tapped on the support level, went up a little bit and then sold. Went up a little bit and sold. Then coming back to this level right here and coming back, pulling back to this level here. Now, that is exactly what I'll be expecting to happen here. Once it bounces this level here, I will expect it to, first of all, react to it by buying a little bit before, if it wants to break, it should break from it. It should break here and then retest this level before even selling. You understand? Before selling again. That is price action for you. That is how price action works. That is exactly how price action works. It doesn't fail. It just works that way. Since inception, price action has been that way till date. Now, as if that was not enough, it still went up to give us another trade opportunity. As you can see right here, it broke this level. Now, after the break, the next thing that happened was it started pulling back into that region. Now, it pulled back, gave us candlestick patterns that we are beautiful. The first candle exhausted, the second candle gave bullish vibe, and the third candle was bearish. That's a clear indication that this market wants to sell. Then if you go down to like the 1 hour or the 1 minute or the 15 minutes, so if you go down to the 5 minutes or the 1 minute, let's go to the 5 minutes first. You can see clearly that this is a double top. Double top, that's a clean sign. Now let's see the 1 minute and see how it played out. See that this is a triple top. how the market just played out. Picture perfect. Even a blind person, a newbie today that's watching this video can just use the advantage of this. As you can see, you see how price action has been. See how price action has been selling. This even a blind person can see that this is a clear bearish market and it's a very beautiful trade. And what happened at the end of the day? The market gave 1 to 6. You are risking 2 pips, 2.9 pips to get 17 pips, and you made more money than somebody who caught 500 pips, 100 pips, which is 1 to 2, 100 pips, 1 to 3. But here you made 1 to 6. If the person made, this person is risking $5,000, the person will have about $10,000, 1 to 2. But the person caught about 100 pips. But you are risking 2 pips and you made 17 pips. So let's say this is the only trade you took, and when somebody asks you how many pips did you caught for the week, you said 17 pips, they might laugh at you, and say something like this, like they will just say, you caught only 17 pips. And some of them will not say I caught 100 pips, 200 pips, 300 pips, 1,000 pips, 2 and 3,000 pips. But your own reach to reward is higher than their own. You understand? So that's the power of risk to reward. Now, how was I able to see this thing? It was because of multi-time frame analysis. I want this market to break. Once it broke and closed at this level, that is where I'm satisfied now. I will go to a lower time frame and start looking for what? Trade opportunities. It's a no-brainer. It's a very simple thing. Everybody can do this. You can do this. You can do this. Yes, you can do this. It's a very simple thing. You can also add a trend line to it. You can also add a trend line to this. You can also add a trend line to this. Very beautiful. Add a trend line and you are fucking good to go. Very beautiful. Straight to the point. The market sold, gave you every single thing you need. That is superbly amazing. It is superb. It is so amazing. Hope you get that right now. It is so amazing. So, with that being said, that is all I have for you in this particular video. Subscribe for more trading tips